I always tell people, don't just call your bank that you're banking with.
Oh, yeah.
You can call them, but call a couple places. You know, lenders can do different things. Once a buyer can get turned down by one person with one pre-approval, and then they're
like game over.
Yeah, they just throw their opportunity away. And I say, time out. Let me help you.
Because they're usually close, and it's just a few extra things they could be doing. So add value, stay with them, keep the hope alive, and get them into their home. Welcome to Courageous Stewards, the podcast where legacy meets leadership.
We believe stewardship isn't just about managing resources. It's about multiplying impact, honoring purpose, and building with eternity in mind. Each week, we dive into business-focused discussions on real estate investing on a foundation of faith and family.
We have a desire to inspire listeners with a heart to reclaim their time, talents, and treasures for something greater. Whether you're growing your portfolio, leading a business, or a family, we need to become the best version of ourselves.
This is your space to gain wisdom, walk in courage, and steward what matters most.
Let's build what lasts. Let's lead with love.
Let's become courageous stewards.
All right, welcome back, listeners, to another episode of the Courageous Stewards podcast. We got a good one today. We're excited to have another guest with us. This is Amanda Ross. Amanda Ross is licensed as a real estate agent and a realtor in both Ohio and Indiana. She's licensed with Amerimade Realty up in Bryan, Ohio, and she's also licensed with True Blood in Hicksville.
Actually, True Blood's in Fort Wayne,
but
Indiana. The home office is in Fishers, Indiana, so kind of the Indy area. Yeah.
Perfect.
Cool.
She also owns a small business in regards to a home gym and fitness center, and is enjoying that for sure. And so if you want to just introduce yourself and tell us a little about you and what you're doing.
Yeah. So my name's Amanda. I have owned a gym for... Wow, I think it's been about 19 years. So the actual gym portion has been about 13 years, but 19 years ago, I quote unquote retired from Steel Dynamics in the office and had my son and decided I wanted to be a personal trainer. So I started doing that out of my home.
Whoa, wait a minute. You have a 19-year-old son?
I do have a 19-year-old.
No way.
Yeah.
Holy moly.
Yeah,
we were talking off camera about a few of these topics before we started, and I heard my son, and I thought, young son. No, not the case.
No, he's 19 and he just graduated. So
no way, this year?
Yeah.
So you guys just got finished with graduation and that whole thing.
Yeah.
From where, Hicksville?
Yeah, from Hicksville.
Okay.
Yep. Well, he did online school this last year, but yes, yeah. And so 13 years ago, we decided to actually do a brick and mortar gym. So it's a 7,000 square foot gym. 24 hours, the whole thing, open the door with an app type thing, trying to stay on top of technology and all that stuff. So
that's also in Hicksville?
That's in Hicksville.
Okay.
Yeah, right on the main drag. So, yeah.
But you're pretty prominent as a realtor in the Fort Wayne area as well, correct?
Yeah. So I started in Indiana, actually. I took the test over there and I passed, and I decided, since it was still all the information was still in my brain, that I should just go ahead and get Ohio too. So now I have both licenses in both states, and I just got top producer in my group for April. So that was exciting. I don't even know anymore, maybe about 15 to 20 of us in Fort Wayne now. So our home office is like close to Indy. So that was exciting for me.
Very cool.
Then, so fitness, real estate was kind of something that I decided to do during COVID because, well, if you own a gym, guess what? During COVID, you didn't have a job.
Yeah.
So they made me shut my doors, and I got a little bored. So you can imagine I'm always on the go. So I decided to start studying for that, and nearly stopped about 20 times.
Oh, yeah.
Really?
Both
Why
of
is
you
that?
understand. The test is hard.
The test is very
I didn't
hard.
think that it was near
It's
as fun as I
all-consuming.
thought it would be,
Yeah.
It's a hard test, and you have to keep yourself interested, I think, especially when you're trying to do it from home. But I ended up deciding to go and do an in-person class in Fort Wayne. So
I did that in Phoenix
That
when I
was a
had
lot
mine.
better for like how I learn.
Right.
I learn better in person than, online. So
Yeah.
but yeah, entrepreneur at heart and enjoying both of the jobs, the real estate and the gym.
That's incredible.
Yeah.
And you recently got a drone. And
Yes.
you had mentioned your fiance and son are both working on some licensing for that.
Yes. My son just actually got the licensing for that yesterday. So we've been playing around with that, and that's been really fun.
Very cool.
That's a fun industry.
Lots of property too in our area that you can use drones for with acreage and things like
Oh,
that.
yeah.
So
Yeah.
The directions that you can take the drone business are so much fun. You can take it when you go on vacation. You can do
Yes.
videography of anywhere that you are. If you see something that seems like a really cool shot, you can just pop that thing out and get a good shot of it.
Yes, I just like to, always grow and make sure that I'm not staying complacent. So I was like, well, a drone sounds like the next step.
Yeah, sure, we'll try it.
Yeah. So we're going on a couple vacations. We'll probably take it with us.
That's
at
fun.
the end of
Very
the
cool.
month,
We've
so.
done that all around the country.
Yeah.
And stuff. You just can't fly. Something we found out very early on. You can't fly in or around national parks.
Oh.
So if you're traveling inside national parks,
that
don't
makes
get that out
sense.
and go up, because you
Get
will
in
get
trouble?
reprimanded for sure.
Some kind of
Yeah.
federal law. Okay,
Yeah,
I'll make
Is
sure.
that-
I
is
state
that-
parks is kind of according to the guards that are kind of monitoring that area,
Okay.
whether they'll allow you to or not. But national parks are federally regulated. And
Okay, it's a
no,
no-no.
you'll get fined like thousands and thousands of
Oh my
dollars if they catch you.
Is that what happened when you guys lost the $4,000 drone? Did they shoot it out of the sky?
No, that would have been awesome.
It's
That
like-
would have been a great story.
This is
That would have
gonna
been a
be
better
great.
story than a
Yeah,
stick,
it
huh?
just exploded.
This is great footage. Boom.
Okay. Oh, shoot. So we brought Amanda on the podcast because she is well versed in the real estate game. And a lot of what Amanda puts online has to do with like questions that a lot of buyers or sellers don't really know the answer to. And so she'll kind of do a deep dive on a specific subject about something and kind of give some clarity on that. And we wanted to provide that information to our audience, because a lot of our audience are going to be buyers and or like newer investors in the space that may not know the answers to a lot of these questions. And so we wanted to dive into some of these and give some clarity on that to our listeners, and hopefully create some interest both for Amanda and her businesses that she has going, but also just some understanding in the realty space. So both Sean and Amanda have their license currently, both hung at the same agency here in Ohio anyway. And so I'm going to ask primarily Amanda, because she's our guest, but I do want Sean to chime in. And I had my realtor's license many, many years ago in a different state, and so I'll kind of chime in a little bit here and there as well. But I'm primarily going to ask some questions of you guys, and I want to hear your answer
We're gonna
to some
fight,
of these.
Amanda.
Okay, let's go. You ready?
Now, typically, Amanda will go either way as far as whether she's a buyer's agent or a seller's agent. Sean typically tries more to be on the seller side of the space, correct?
For sure. Yeah, I like to focus on listings if I can.
Okay, cool. So let's just dive into this first, kind of the roles behind what a realtor is. What is the difference, Amanda, between a real estate agent and a realtor?
Well, definitely when you're a realtor, you have to have this license. You're a part of the National Association of Realtors.
Right.
So you have to follow this additional code of ethics and all that. And many times you can't post on the MLS. It kind of depends on where you're at. I kind of looked into that without having that realtor,
The designation?
Yeah, the designation on that. So every real estate agent is not a realtor, but every realtor is a real estate agent. Does that make sense?
Yep.
So, yeah.
So you can be a real estate agent without being a realtor.
Yeah.
The realtor designation is kind of in addition to, maybe makes you a little more qualified to answer a lot of those more challenging questions.
It's a higher standard because I think being in that association, you're required to maintain a certain code of ethics. So for us, we honor that code of ethics, and you wouldn't necessarily have to just being an agent. And I think that sets us apart from other agents that maybe aren't realtors.
Right. Yeah, that makes a lot of sense. So the next question that I have written down here is, can an agent represent both the buyer and the seller? Is that a good idea? I know you touched on this pretty recently in one of your online posts. And so I want to throw this to you because it's a challenge that you guys deal with on a pretty regular basis.
Yes.
And I'd like to know your thoughts on it.
So I think there are pros and cons to both. The biggest pro is probably for the sellers, because a lot of times an agent will give a discount to the sellers if they're representing both sides. I'm not saying all do that, but some of them will do that. So you are, as a seller, you're paying a lot of money to list your home. And sometimes, the fee of paying two different agents is going to probably be somewhere around 3% both sides, maybe a little more, maybe a little less.
That's a great piece of information right there alone that a lot of folks would not have any idea.
It's all, a negotiation, but I think that's pretty average around here. And sometimes if you have dual agency, the listing agent will do it a little less, because there's only one agent. But at the same time, sometimes it's really hard for agents to know who's your client, who are you going to fight for? I think you have to be very neutral if you're going to be, a dual agent for both sides. And so sometimes, I don't know about how you act, but when I have a client, buyer or seller, I just go to bat for that person. I feel like my negotiation tactics are very good and sharp, and I can negotiate for my clients. It's going to be harder for me to do that, knowing that I have the buyers and the sellers. Who am I negotiating with? They're both my clients, and I can do it. I just, I think there's pros and cons to both.
Yeah,
there is, because you want to be objective, of course, in that approach entirely, as much as you can. But it is hard because you want to serve both clients fairly and well.
Yes.
And so how do you navigate getting the buyer a good deal and getting the seller the most money for the sale of the home?
The term in the industry is called fiduciary. And that's a requirement as an agent, is you have a fiduciary responsibility to your client. And when you have a client that's on both sides of the table, who is your fiduciary supposed to be to? It can't be to either. You're just a neutral in between. You communicate to both sides and cannot necessarily represent either one more than the other.
Yeah.
So it creates a level of complication where your hands are kind of tied. If you're representing one or the other, you're all in on that particular person that you're dealing with. If you have it from both sides, you kind of have to just pull back and say, I will give this information to this party and this information to this party, and I'll do the paperwork, but you have to tell me what you want to do.
Right.
Yeah. And I think a lot of times the value is in, we have to use data. We have to use information that shows why it is what it is. Because when we work with any client, it can't be opinion, because we can't sell it on their sentimental value behind the home. Right. It's like, here's what the market's paying. So if you can be transparent with both parties in a dual agency and show them what the data, what the market's showing in regards to pricing, and just be transparent, find a deal that works for both parties, and just let everybody know that that's what the goal is at this point, and have the data that backs that. A lot of times it removes that animosity behind, okay, who are you helping? It's like, no, it's right here. The data shows their offer is here. Your home is worth this. We're right here in this pocket here. I think this is a fair deal for both parties. Then they're not sitting there wondering if you're helping the buyer or the seller in a dual agency.
I think buyers also think that they're going to get some upper hand if they call the person on the sign. You know what I mean? And sometimes it's great and that works, and sometimes, So when I list a house and I market it on my socials, I'll say, you can call me or call your favorite agent. You know what I mean? I'm always pushing that, You don't have to call me to get any information on this house. You can call your favorite agent. They can message me and they can take care of you too. You know what I mean? Because people still don't really understand dual agency. Let's be honest.
And they don't. And then there's the ethics behind that. Calling the listing agent doesn't give you an advantage, because I can't share any more information with you for my seller than another agent is going to be able to share it with you.
Especially initially, because you have no signed contract with them as a buyer.
Right.
You have a signed contract with your seller.
Yep. Yeah,
and so your fiduciary is going to always be, at least initially, to them and their best interest until you have an agreement with the buyer as well. And then it throws you into a whole kind of new set of complications, I guess.
Yep. Let's jump back real quick, because this was pretty new. This was August of last year, the buyer agency agreement, just the fact that they split it up. So when home sales used to be, it was just one thing and it had it all on the one contract, basically. You were basically just listing for the seller of the home. Now they have an agency agreement for the buyer representation that's now separate from the seller. So when you are talking with an agent, you used to be able just to call an agent, they could just show you the house. Now they've got to sign a paper for buyer representation. And I don't know if there's still people out there that haven't dealt with that yet or are going to be surprised by that, because it didn't used to be that way. But now they're separating both representation and the commission. Now, like Amanda, you were saying, it's still primarily, you're seeing a lot of times the seller is covering the commission, but you do typically sign an agreement with the buyer agent now if you're just looking for homes. Now, those buyer agency agreements are flexible. They can be for 3 months. They can be for the one showing of the one property. They can be for a year. I would be very careful, because when I serve a buyer, it's always, I want you to call me back for your next showing because I served you well on the first showing. I'm not tying you into a year-long buyer agreement.
No.
Because you're stuck. Because if that guy calls you and gets you to sign a year-long agreement and he's not communicating properly, not getting you effective showing times and serving you well, you're going to have to pay him commission even if you call another agent and sign another agreement, because you're still on the hook for both of those contracts. So I would just say be careful with that, but be aware of it, and it is part of how you buy a home now versus what it was before a year or two ago.
Basically, don't sign any long contracts, because nobody needs to be doing that to somebody.
Yep.
You know what I mean? Why are we doing that? Why are we making people sign it for years?
Yeah.
You know?
Yeah, that's pretty unfair and kind of unethical.
Yeah, I
would
think
say.
so too.
You hear it all the time. I've
And you
talked to a
can
couple
get out
people.
of a buyer agreement, but it is awkward. It's an awkward conversation at that point.
Sure.
you
It
know?
is.
Yeah.
Sure.
And then
a lot of people don't want to do it.
And oftentimes the agent's not telling them that. They don't advertise there's an out. They just want you on that paper for a year, and then everything else stays hush hush.
I always tell everybody, if you don't like me, you can fire me anytime.
Yep,
But
and
I just
that's-
need you to sign that.
Yeah.
That's what I tell them too.
I think that's a fair way to handle it.
is,
It
yeah.
really is.
I have a no handcuff policy, so even on a listing side, if we're listing the home and I'm just not working out, I'll terminate it tomorrow morning for you, and we'll get you to an agent that's I want you to sell your home,
Yeah.
and work with an agent that's working and serving you well.
So that's a good clarification, I guess, to talk about, is that it used to be between 6 and 7% typically on the seller side would pay the commissions to both agents. And recently that has changed slightly in that it's been separated, where the buyer is represented by the buyer's agent and typically will get their commission from the property, but not always. The buyer is still on the hook to some degree to pay the agent that's representing them.
It can be.
It used to
Yeah.
be
Can
where
be.
where the seller just paid the commissions.
Yeah.
That was just the way it was.
Yep.
Now it's kind of split, and you could potentially pay on your side, whether you're the buyer or the seller. But still, typically, it will be covered by the seller.
A good agent should be able to negotiate the buyer commission into the deal in one fashion or another. That's what we strive for. I'm sure Amanda does the same
Yep.
thing.
Yeah.
It just was that way, and people are used to that. And so it's just a negotiation tactic that you can use to make sure that doesn't fall on the buyer as much as possible.
Now, we do have some investor questions here that we want to throw out. And I know Amanda is more of a business owner and not necessarily an investor in the space,
Yeah.
but still very knowledgeable on real estate. So I do want to get your opinion on this. How should an investor choose an agent that they want to work with?
Yeah. What are some good questions to talk to an agent about in regards to if they're that type of agent?
Yeah. Do you have an opinion on how an investor should choose an agent?
I mean,
You hear the term investor-friendly agent. a
yeah.
lot.
And I'm not really sure if that just means that the agent is also an investor, because that obviously makes sense, right? I'm not in the investing side of real estate, or at least yet. Passive income's the way to go, though. I mean, I
Amen to that.
have a 24-hour gym. I know passive income,
Yeah.
you know?
Yeah.
I don't show up for a week and I'm like, oh, this is great. You know, my clients are still getting
Yeah,
in.
that's
I'm still,
what-
you know, it's great. So I get it. But I also think that, you know, you could look at it a lot of different ways. Like, do you want to pick somebody who's also an investor? Like, obviously, Sean's an investor. He's probably going to have some great, you know, information for him about the area and just how it looks, you know, as on a business standpoint. I also own a business. It's just not, you know, an investor side on real estate. So I do know the areas that I'm in as well. And I have a lot of exposure. So I have a lot of exposure on my social media platforms. So I have a lot of people looking. I have a lot of, you know what I mean?
Yeah.
So if an investor says, hey, if I work with you, if you sell me some houses, are you going to be able, I'm like, well, I can market any of your properties.
Yeah.
I can share them and have 15,000 people see that post in one post, you know?
Absolutely.
So sometimes that could be a benefit.
Yeah.
So what do you think, Sean?
Yeah, it's just, I think if you were trying to find that agent, it's just a matter of asking some questions around what you're in. Because, like, I don't do you do real estate investing, but maybe not big commercial properties yet, right? But when it comes down to investment properties, I think having an agent that at least speaks the language with you, because a simple example is just having a house or a duplex for sale, that's an investment property. Maybe it's already rented. So if you have an agent that just does residential homes, comes along and goes, we're going to price it right here. And you're like, that seems a bit light. That's getting so much of rent. That's so much NOI. That's a little bit low really for the pricing. But you have to understand how investors price homes, because it's a balance between the property value and the cash flow.
And the income, yeah.
So it's one of those things where there's a balance there. So you may list that at a certain price, but it may be just a little bit higher than that just because it's an investment property that's already cash flowing. So if you just ask an agent if they have exposure to investment properties, whether that's small, multi, commercial, what that is, and have them talk with you and share what their information experience is with that, you'll know right away if you've got a good agent. When you're listing, it's kind of different, because if I'm listing a home and I hire Amanda, I can talk with Amanda about what and why I want to do it a certain way. But on a buyer side, they may want an agent that's got that experience going into the deal, because then we're going to bring them deals with the understanding what they know. Okay, this is priced a little higher than just residential value, but it's also a duplex with two people paying $800 a month in rent. It's got a good cap rate. Let's just get this in front of the investor. That would be what I would do.
From my perspective, an investor-friendly agent is a little more creative in their approach to real estate, because they're dealing with folks who are looking for numbers rather than a property that is kind of their end live-in property. Those agents, not that they can't have creativity outside that frame of mind, but investor-friendly agents, typically they know the numbers. They know how to calculate, your NOIs and your cash-on-cash returns and a lot of those details that maybe a standard agent they don't work in that space. And so could you look it up and ask AI? Yes, you absolutely can. But when it's not front of mind on a regular basis, you kind of lose a little bit of that creativity maybe. And so finding an investor-friendly agent, in my mind, is somebody who kind of understands the nuances of the difference between investing in a property and buying a property to live in.
Yep.
They understand the numbers.
You said the word creative too, and that's a big asset for an investor. So a tool that we have just being investors is, if I'm working with a buyer for a property and we have our contracts, conventional, cash, V8, all the regular financing options. When you're an investor, there's so many more options to bring to the table through creative finance. Jake and I are familiar with that just because we're in that space.
Right.
So you ask, can you do seller finance? Subject to, can we assume the loan? Can we do some payments to you for a year under land contract and then pay you off with a balloon payment at the end of that following year? All of a sudden, those few options just went like this.
Yeah.
And you can at least propose that, and that investor is going to go, awesome. I love what you're thinking. I love how this is going to work. Cash flow is going to be strong that first year, and then they'll finance out. And knowing that language is what I think the advantage is for coming to a buyer that's an investor. But yeah, you said creative, and my wheels were like, oh.
It even goes so much further than that. A lot of times those agents that are investor friendly are also investors. And so they have maintenance people, they have plumbers, they have, property managers, they have all of those things that are kind of in their back pocket. And they could say, what do you need after you buy this? You need somebody in this area that can do that thing? I know somebody, I'll send them your way.
Yeah.
And, it kind of it propels your advantage very quickly, potentially. So I want to ask some buyer myth kind of questions, if you guys are up for that. The first one is, do I actually need a 20% down payment? That's the theory that a lot of people have in this industry. Well, I don't have 20% down. I'm not ready to buy a house yet. Do you really need that? What do you think?
You don't. No, you can even get a conventional loan now for like 3.5%. I think a lot of banks are doing.
Yeah.
So conventional loan, you have FHA loans, USDA loans with nothing down. VA loans are also, nothing down if you are a veteran or whatever. So there's a lot of options. And I always tell people, don't just call your bank that you're banking with.
Oh, yeah.
You can
So
call
good.
them, but call a couple places, lenders can do different things, even credit unions, and, we all have our favorite people that we use.
We do.
Yeah.
Yeah.
It's so
We all
fun.
are sitting here thinking like, I
Yeah.
typically use this person or that person or this bank or that bank, whatever.
Yeah, so that is kind of a nice thing, and I think that once a buyer can get turned down by one person with one pre-approval,
goodness.
and then they just,
They're like game over.
yeah, they
It's
just
like,
throw their
no.
opportunity away. And I say, time out, let me help you. And I just did this with one of my friends. She purchased a HUD home in Hicksville, and Misty was the listing agent on
Right
it,
on.
of course. And she kind of got knocked around a little bit. And I was like, hold on, let's try a third place. And I said, I know we can do this for you. Let's figure this out. And she's living in the house today.
Very
so,
cool.
Yeah,
Nice.
she just
Good
closed
for you.
last week. So, yeah.
What you just said brought something front of mind. Go ahead before I move on.
Oh,
You
I
have
was just
something
going to say that's a great attitude to have as an agent for your client, because they can be so quick to have the door shut and lose hope. It's like, let's keep trying. How can we do this? Because there are, like you were saying, a variety of lenders, variety of options. Don't get hung up on just yours, because we wait for permission. It's like there's somebody out there that's going to make it work for you.
Yeah.
If you can work with them and get a contact with them and see what options you have. So yeah, just keeping that hope alive for your client is value add for sure. What if you were an agent that was just like, oh, you didn't get pre-approved from your bank?
I got to move on.
Yep. Oh, shoot.
Good
Well,
luck.
call me in a year or
Yeah,
two.
give it a year.
And no,
Build some credit and then call me
Yeah.
that. Like, that's not
And that's
helpful.
a sign of a good agent who's
Yeah.
willing to dig in,
Yeah.
and say, no, this isn't the end.
I have messaged clients on steps they can take to improve their credit. Because
Yes.
that is such a hiccup.
It is a
for
big
them. I'm
one.
like, hey, take these 5 things and start doing them tomorrow morning.
Yep.
And stay in touch. I'll stay with you, and we'll get your credit up, just because they're usually close, and it's just a few extra things they can be doing.
Yes.
So add value, stay with them, keep the hope alive, and get them into their home.
All banks don't have the same requirements either. As like to your point, you were saying, kind of reach out to several different lending institutions. And they don't all have to be banks. There are national banks, there are local branches, there are federal credit unions, and then there are brokerages that kind of go out and find a whole bunch of different options for you to choose from.
Yes.
Now, they may be a little bit more expensive on the lending side. For closing purposes, you're going to have to pay that brokerage a little bit of a fee to do it, but there's so much creativity there. They can go find you something when you seemingly are unqualified.
Yes.
You just became qualified because you're hooked up with the right person
Yeah,
who can go
it's
find
good.
the right thing for you. So I did want to circle back just to what we were talking about previously, the dual agency thing. You brought something up that kind of just flipped a trigger in my mind. Dual agency. So you guys have your license, but you are not brokers. You have your license hung with a broker. That is Amerimade in your situation. But that would be the same for Remax or any company out there. So dual agency, and correct me if I'm wrong, because I'm not an agent. I used to be, but I'm not now. So dual agency means that you are both on the buyer and seller side using the same brokerage. Not necessarily the same agent. So keep that in mind as buyers or sellers. If you hire Sean to be your agent and you're selling your home, and then Amanda brings the buyer, that's dual agency.
That's bringing up some trauma.
Now that doesn't necessarily.
We almost had a deal together, didn't
My
we?
feelings.
So basically, that creates the same challenges because the broker has the fiduciary responsibility to both of those clients. Now, you individually represent them, but you're limited on what you're capable of kind of communicating back and forth to some degree because the brokerage has both of those, not necessarily the agent. Am I wrong in that, or am I correct in that?
Yeah, I think you got it.
I mean, yeah, I think so, but also
It's one
we're
that you would have
also
to ask Misty
1099s and we're self-employed. So if he has his client, I have my client, we're both going to make sure that both of them are represented individually too. You know what I
Yeah,
mean?
for sure.
But I do understand what you're saying. Yeah.
It could potentially at some point come back to the broker
To make
as a
some kind of
liability concern
Sure.
down the road, if something wasn't handled properly on both sides, I guess. I want to go back, though, to the financial thing that we were just talking about and talk a little bit about pre-approvals. Does a pre-approval mean that you are 100% guaranteed for that loan?
Not even close.
No, it doesn't. Especially if somebody goes out and buys all new furniture on a credit card or something in the process of buying their house.
Yep.
So talk about
It's
that a
got to
little
get
bit.
to
Yeah.
underwriting, that's
Yes.
when when we get through underwriting and we have the clear to close, that's when we know that you're good.
Yep.
So don't go out and buy a brand new
You
car
Please
and
don't
pull
buy a
your
boat.
credit.
Yeah. Get a lake house. Just don't buy anything.
Yeah.
The inspections and appraisals are enough to have to worry about during the
Yes,
process.
yes.
Don't go out and rack up debt or take out another loan or buy a car. You will ruin your own financing.
Yeah. And I really hope, I don't know, do lenders tell them that?
They try to.
Okay.
They usually do.
I hope so. Because
my,
I don't
at
always
least
remember to tell people that.
a
'cause
good
that's not
lender
really-
should.
Yeah.
Yeah.
Because my lender's always telling me, okay, we're in the approval process. We need to get through this. Don't make any big purchases till we're done. And it's like, okay.
I'm always cautious as an investor. If I'm going through a refinance or I'm purchasing a property, I put everything else on pause.
Yep, yeah.
I'm not opening credit cards. I'm not refinancing anything else. Yep. I know that you can do some of that stuff. You just have to do it with caution.
Yes.
Especially on the commercial side, because there's a lot of nuances there.
Yeah.
That
It's
won't
just
necessarily go
better
into.
practice not to.
Yeah.
It's all about getting that deal done, making sure you get to the finish line. And if you're the one that screws it up, that's going to be tough to handle.
Yeah.
That's going to be frustrating.
Yeah. So another investor question real quick. This one says, for light investors looking at house hacking or small multifamily units, do these down payments and loan rules change?
So that depends. This is more of another kind of like it can, but it doesn't always have to. And it depends on your strategy.
Yeah.
So for me personally, I started investing in the small multis from a business standpoint. So that was an LLC. Everything was purchased by the LLC. So what that changes in regards to financing is it doesn't let you go in and finance on a more conventional style residential where you can get that 3.5% down on an investment property. You can do it if you own it as a personal property. You can get those kind of financing options. But once you go into an LLC, they traditionally expect to have that 20% down. So it absolutely does change that depending on how you handle it.
Okay.
But yeah, you can buy a duplex with 3.5% down. It just better be in your name as a personal property.
Yeah.
And there's liabilities with that, but we won't get into that.
We can do that on another episode because there is a lot of interesting nuances there for sure. Let's move on to some seller myths. So I'm going to ask you this one.
Okay.
Should I price my home higher than market value just to leave room for negotiations?
So I've seen both ways. I've seen people say, we can always price high, but we can come down, right? But we can't go the other way. Sometimes I've seen it and it's been fine. It's been great. You know what I mean? I've seen houses also sit. But I will tell you, if you price a house in a good price range or even a little bit less, I almost always see like a bidding war. So which is better? Do you want people in your house? Do you want to have a bunch of showings? Do you want that bidding war, or do you want your house to sit with 1 or 2 showings in a month?
Yeah.
Right.
I mean, I listed a house here in Defiance. We dropped the price after a month. She didn't have any showings on this house. We dropped the price after a month. They ended up asking over what the original price was because it got them in the home.
Right. That's what
So
I
the
tell.
lower price actually got them in the home. The higher price didn't. They saw the house with their own 2 eyes, loved it. We had like four showings that week. Then
was a
she
sense
ended
of
up getting
urgency.
over asking what she had originally asked for.
That's
So
wild.
it just, I don't know, it just kind of depends.
Yeah.
What about you,
I'm
Sean?
with that. So I typically I talk to the client about what their goals are with the home sale. Because a lot of times they'll tell you, it'll be like, well, we're not in a big hurry. We just kind of want to get it out and get it on market and see what interest we get. So I'll tend to go, okay, what we're going to do is we're going to play a little bit higher on the price end and see if we get some showings and schedulings. As long as you guys are okay with it, after a bit, we'll lower price. But typically people want to sell and move and get their things done. So when we have those conversations, I more encourage a value price, a price that's attractive, a price that will get people to go almost like, that's pretty fair. Or like you said, just a little bit under fair. Like, I got to go see that house.
Yeah.
Because you'll get interest and you'll get it sold fast and you'll get a fair price for it because people know, like, oh, this is a nice house. It's got to be right for the buyer, of course. But I think if you price high, you scare people away. And there's a psychological thing that happens. The agent, we got to pay attention to this because as a buyer, I know it. I've been the buyer before, right? So think about being on realtor.com. There's all these houses and you're scrolling like we always do. I want to see that one. I like this one. When you see that house or that picture and you look at the price, your brain goes, that's crazy. You're done. You have literally checked out of that property, period. So the next time you're on realtor.com and there's some new houses and you're scrolling again, your brain, that one won't even register on your radar. You'll go buy that one so fast. Oh, that's that one.
Yeah.
You've already
too much for that.
You've already lost that buyer, and you've lost any potential of that buyer down the road. They see picture, they don't look at anything else because nobody's like sitting there reading every single house description. They're going, oh, that's that one. They're already past it. You may have even lowered the price. They may still go past it. So there is importance in making sure it's a fair price or even a low price because you've got to get them in, and then you've got to get them locked onto that property because then they don't forget it. So then they do watch it or they go see it.
Yes.
So
You're not necessarily losing by underpricing a property slightly either, right? Because there are strategies that can be used to even elevate the price from what its original list was, like highest and best,
Yes.
escalation clauses.
I have one of those coming up. I have 10 showings on this house I have listed on Friday. It's coming soon.
Holy
10
moly.
showings in the first day.
So talk about that. There's a strategy
incredible.
right there that actually we
Yes.
used just in the spring for one of my rental properties that we sold. And that coming soon strategy a lot of times will really drive interest to a property for when it actually comes online. So how does that work? Talk about that a little.
Well, you have, you might have a picture of the outside and maybe just a couple of the inside. I don't have any of the inside yet on this one. Maybe a drone shot or an aerial view.
That's what we did.
And you're going to coming soon. So maybe the sellers aren't quite ready yet, right? They want to fix a couple things, but we also want to get some interest.
yeah.
Yes.
So it just creates interest. It creates a little urgency. It gives people time to get their stuff scheduled.
Yep.
I think you can have it coming soon up to 21 days, which is so random. Like why
Yeah.
not 20 days or 25? 21 days.
21 days. 3 weeks.
Yes,
suppose I can get-
21.
yeah.
I guess. And then I don't know. I think it can really help create like a sense of urgency or even just interest. You know,
Yes.
interest in this
I
place.
agree
So.
wholeheartedly.
You're capturing the buyer market before you're ready for the buyer market, which is awesome because you'll have buyers go by, see that coming soon, look at them like, oh man, they may already be kind of thinking about a different one or something, but they're going to go,
I just got to wait a little bit.
I got to see that
Yeah.
one at least. And so you're capturing buyer market ahead of them, ahead of you being ready, which I think is a great strategy.
Kind of creates a buffer for everybody. It gives the sellers an opportunity to fix and tweak those little
Yeah.
details that they may, still need to. It
Like-
gives you an opportunity to make sure you have all your details in alignment. You can communicate with some other agents ahead of time that maybe have some interest in showing a couple of clients that they've had for a long time, and you can set that up.
Small tweaks like adding a fourth bedroom.
Yes, we did that on mine.
Wait, what? You just added a
That was our
So I
coming
would-
soon.
Yeah, so I had a 3-2 that's right across from the YMCA.
Okay.
Really great property. It has 2 living rooms. And I thought, well, if I just put a wall up here, this just became a bedroom because there's no longer the requirement that a bedroom has a closet in
Okay.
it. So I'm like, I'm going to bring a contractor in. We'll build this wall. It just became a 4-bedroom, 2-bath instead of a 3-bedroom. We elevated the price by $20,000 and it sold in 12 hours.
Yeah,
Oh,
full
that's
asking
great.
very fast.
It just boom, boom, boom. But we had it on as a coming soon for
we
a couple
did.
weeks.
Yes.
And so there was a lot of interest being driven that direction. There's so much travel there. It's
Yeah.
a great location. And so, yeah, it sold for way more than we originally thought it was going to. And we actually had quite a few people that came to us and said, why did you sell it at that price? You should have asked more.
Yeah.
And that was like almost 50,000 more than we originally talked
Oh,
about
wow.
listing it for.
Wow.
So it was just like mind blown.
You just
Yeah.
don't know. The right
Yeah.
house is the right
You just
house.
don't know.
Right. Yeah. So, yeah, I would agree with everything that you guys just said there. That's cool. So, are inspections and appraisals actually required?
Inspections.
Inspections and appraisals. Are
Well,
they
you
required?
This is a pretty.
Yeah.
I think most buyers think that inspections are required.
This is
And
another
they
one that you put
are
on
not.
on your page that I read.
Are they recommended? Yes.
Yes, yeah.
Are they required? No.
Right.
Appraisals. If you are using a lender or a bank, yes,
Right.
appraisals. And then sometimes people will do a VA appraisal or a, USDA. Like those are a little bit more in depth, but it is not an inspection either, right? So we have to remember that those are not inspections. They're not going to check, for water damage, in your crawl space with those. That's not going to happen.
Right.
They're going to check for peeling paint handrails. I mean, come on,
Yeah.
By the way, the VA they're getting rid of that in a VA loan.
Are they?
Yes,
Thank
they're going to
goodness.
make it a
They're
lot
loosening?
easier. Yes,
'Cause
for
we were
VA
just-
anyway.
I talked to Jake about how ridiculous appraisals have gotten in regards to the
Yes.
strictness and the amount of stuff that's like breaks a deal. It's like, so that's good to hear a little bit.
It is. But you do not have to have an inspection, but it is definitely recommended.
Yeah.
Yeah, that's a
Right.
great
And
point.
I mean, you hate to say it, but sometimes in a highest and best situation, an inspection
It can make or
can
break
make
that
or
deal.
break that.
Yes.
But what people are doing, and I don't know if you've had this happen, people are doing what they call limited inspections now, or an as-is inspection. So they're going to come in and they're still going to get an inspection, but they're not going to ask to fix anything unless it's a huge issue.
Oh, yeah. Yep.
Okay. Or they just want the house checked out to see if there's anything majorly wrong.
Yep. Deal breakers.
They're not going to ask you for the small things. They're not going to ask you to fix the electrical outlets or the gutters, the replacement of the, like I also
Yeah.
made a post about those small things that always show up on the
Yes.
inspection.
Yeah. I always guide buyers to that
Yes.
point. Like, let's get this inspection, because what I'm worried about is you not buying a house that has a messed up foundation or something that's going to cost $10,000. But if we go in here and they're like, this light fixture isn't wired properly, whatever that little thing is, like we're not going to go after that, because it's just not.
No, you're not. Even if you're buying a brand new house, even brand new house might have an inspection that's not perfect. So you have to remember they're not trying to steer you away from necessarily buying a home. They're just letting you know, hey, there's this little, there's some minor things that you need to, maybe fix eventually.
Yeah.
But no, you do not have to have one.
I love what you said when you broke up the difference between an appraisal and an inspection. I think listeners probably wonder that sometimes. Doesn't the appraiser do that? Theirs is more of a checklist for the lender and the financing that says this house is well enough to finance. They're, like you said, they're not going to tell you go inside and evaluate everything, all the systems, the HVAC, the roof and structure. They're going to look at it to make sure the bank can loan on it, and that's it. And they're done.
That's it.
The inspection is the part that's thorough, in depth, and is going to potentially save you thousands on purchasing a house. So people will say, I can't afford a home inspection, right? They're $400 or so. And I always tell them you can't afford not to have
No,
one. You're buying a
it's-
house that's been around for a while.
Yeah.
If you skip the inspection and buy the home and have a $10,000 repair that you have to have done, you're going to wish you had gotten that inspection.
Yes.
Because then you can negotiate. That doesn't mean the deal's over. You take the inspection results, you pull out the heavy stuff, and you renegotiate a little bit. Like, even if you don't want to pay the whole thing, you want to pay half of it or have them pay half of it. It doesn't always have to be like, I'm not paying any of this, but it adds to the negotiation process and actually
does.
gives the buyer leverage in the deal.
It does.
Yeah. You're never going to find a property that's perfect, to your point. Even brand new properties. Here's what I think people who are buying property need to understand. If on the inspection side, the inspector is working for the buyer. They are trying to find every
good
possible
point.
issue that they can to present to you to give you an opportunity to make an educated decision, whether you want to move forward or you don't. Now, the appraisal, they are not working for you. They're not working for the seller either. They're working for the bank.
That's
That's a good
That's
point.
it.
Another great point.
So you need to keep that in mind. Not that that's a bad thing, but you're paying for that appraisal, but they will not even work with you. They work with the bank. You're doing it for the bank, so the bank will lend you the money to buy the property.
Yep.
So make sure you understand the difference in those nuances. The inspection, like I don't necessarily do inspections on properties. Let me rephrase that. I do my own inspections now on properties that I purchase, but for a long time, I didn't feel comfortable or confident to pick out those nuances that may be a deal breaker. And so you do hire an inspector
I still get
who does
inspections.
that all the time.
Yeah.
But, on the appraisal side, it's a must for the bank, and they're the ones that are asking for it, and they're the ones working with the appraisal company. You are not. So just keep those nuances, I guess, in mind. So is the highest price offer always the best offer?
Amanda, you go ahead.
Well, not always. Cash offers are nice because
Yeah.
the bank is not in there. We can close really quickly. That's always nice, right? Sometimes it comes down to the lender. Sometimes it comes down to inspections. Sometimes it comes down to, what's their post-closing, I guess, what can they do for you? What if the seller needs to stay an extra month and this guy can't, he needs the house right away. So there's a lot of different variables there that you can kind of work with. More money is always nice, but it's not the only, the only thing to look at. You have to look at everything.
Yeah, agreed.
Yeah,
Sometimes it can come down to who the other agent is too.
Oh my gosh, that's
we all
so
know
funny.
that some are really great to work with, and sometimes you're just like, this is adding so much stress to my life. The offers are the exact same.
Yep.
You hate to say it, but
Yeah, it's tough. It can be. Highest and best is great, right? You want to get the most money, or you want to buy the house for the least amount of money, right? On both sides. But when it comes down to highest and best always being the best way to go, not necessarily. I mean, it's for me, you get with a seller, and you got to recognize what some of these contingencies mean, and how hanging on to a deal on these contingencies can push you right out of the buyer season. And so those are conversations you have. Like, yeah, we got a great offer here. This is over asking. But he's got a house that he's going to sell that he hasn't listed yet.
Yeah.
That's going to be on market for a while. And then you don't know how he's going to price that home. So you got to be careful with contingencies. $10,000 is fine. That's awesome. More money, right? But you may sit on this. You may get pushed out of the buyer's market and find yourself in November now trying to sell a home that you had listed in prime summer selling season because you're waiting on a contingency. You got to have those conversations.
Yeah.
Sometimes an offer that's a little bit lighter but has no contingencies on it, maybe they don't even want an inspection. Those are it's like awesome, not even that. So we're not even expecting or anticipating more negotiation after we're signed here. That can be a big value. Like, we're sold, we're done. Like you said, a cash offer is a great example of that. Just done. They want it, they're buying it, no contingencies. Because those all are time and risk on the deal falling apart. There's no close until you're at the closing table signing papers. They fall apart up until the day before you go to the title office.
The day of.
And at the title
No.
office.
They can fall apart
I know,
the day
I haven't had
of.
that happen yet. Don't
can't-
say that.
Yeah.
So it really is what the seller is looking for in regards to all the options. Like you were saying, Amanda, like there's a lot of different considerations for the best offer outside of just the highest price.
This is a funny story. Actually, a unit that I was purchasing, I had the seller get up and walk out of the closing for a $30 fee that they put on their line on the settlement statement instead of my line. And they saw that $30 fee. They would not sign. They got up and walked out and wouldn't sell the property.
What? I wouldn't be like, I'll just Venmo you.
Yeah, I got $30 in my wallet.
Here's some
Sit down.
cash
Please
for
don't.
you.
Yeah. I'd have been
But
like,
at that point, the lady was so upset that she just wasn't having it. And she walked around the building, and I came out, and I'm like, have a lovely day. I don't know what to say, what to do.
Man, that
if you're that
close.
irrational about something so simplistic, maybe this just isn't the right thing.
Yeah.
oh man.
But that wasn't meant to necessarily scare anybody,
No,
but
but
just to
that's-
say that it can fall apart right up until they actually grab the pen and sign
Yeah.
their name.
Yes.
Period. And money gets dispersed
Yep.
to everybody. So yeah, you want to be very careful about that. Let's move on then to some truths and traps. What's the single biggest hidden cost that people forget to budget for? Do you have something in mind? Doesn't have to be the single biggest, but just things that you've come across maybe that you're like, you better make sure that you budget for that. Is there anything that you can think
I mean,
of?
I would just say like maintenance on a home. People forget, you got to have cash on hand for things like the inspection, maybe earnest money, all that stuff. But then, we're not walking into always, brand new homes. There could be something that you need to replace. There could be something wrong with the water heater. I mean, we don't know if it's going to go out, the day after you close, or it's going to last another 20 years. Like, you just need to make sure that there is some cash on hand when you own a home. I think that's really important
Yep.
for all home buyers. Yeah.
Yep, having some money on hand, definitely going into the purchase, is a great idea. And then I guess sometimes the fees that people aren't aware of when they are buying a home, whether you're buyer side or seller side, the whole thing is knowing what your number is. at the closing table, or at least close to it. So whenever you're buying a property or financing one, you're going to have fees and closing costs and those kind of things wrapped up that maybe you weren't anticipating being as high as they can be.
Yeah.
So a lot of that depends on the property value. I think sometimes that surprises people, especially on the selling side, because you can't let a seller get to the closing table without having an idea on what their net is going to be, because the sale price doesn't mean anything. Once their commission's out, their costs are out, all the negotiations, concessions, whatever you've got in there is out. They can be quite frustrated with that final number, and then you're going to be at that closing table, and they're going to look at that HUD statement and go, that's all I got? That's all I'm getting? It's like, yeah, there's a lot of fees. So I'm always having those conversations well in advance to even listing the property. And most of the time they understand, they know. Some of them have sold homes. I deal with some investors, so they're familiar with that part of the process. But new people that are in it don't know that. They're like, okay, here's what I'm selling it for. Here's what I'm getting. Nope. You got this.
Yeah.
They go, oh my goodness, what? Yeah, it's like, that's part of it. So I think a lot of times those are some of the hidden costs too.
I always worked really closely with the title company to try to get that settlement statement in front of the buyer and seller as far in advance from the closing as possible.
Yeah.
And I know they only work, you may be able to get it like 3 days ahead of time or something, so it's not a lot of time, but at least it gives everybody a little bit of peace of mind. They're not walking in going, I really don't know anything. I don't know what I'm getting, what I'm paying, I need the details.
I have a seller calculator that estimates that, and I always tell them, like, this is a rough
estimate,
idea of where you're going to be at the closing table.
I just always call the title companies and bother them. But.
Yeah, I did the same thing.
That's good.
Yeah, absolutely. You kind of cultivate those relationships with those title agents that you can just call and say, for me, it's Cheryl. Hey, Cheryl, tell me what's going on here. You got to give me the details on this. And she will, ahead of time. So another thing that I wanted to bring up as far as some repairs or major issues that could potentially happen down the road, you just don't know when they're going to. There is such a thing as a home warranty that I think a lot of agents kind of talk with their buyers and sellers about. A lot of times the home warranty will even be purchased by the seller for the sake of the buyer.
You can negotiate that.
Those home warranties will cover things like a water heater, a furnace that breaks, like the major things that people walk into a house and think, good Lord, I hope this doesn't break in the next 3 years or 5 years or 12 months. You can buy a home warranty that's not really that expensive that just gives the person who's purchasing some peace of mind.
Yeah, I just did that with one of my clients in Fort Wayne. She was buying this really amazing home. It was an older home though, like a Victorian house. And I was like, let's put a home warranty on this and see what we can get. And she's used it. So she was like, I'm so happy that, so that made me feel much better about that, adding that in there and then having her use it within the first month.
I can't speak to every situation, but I've found that home warranties, you think of it almost like an insurance policy, but a lot of times insurance, you have to it's a hassle to deal with the insurance company when you have to make a claim. Whereas with a home warranty, it's much more seamless in most cases. I can't speak to you don't know how every home warranty company is going to be, but most of the time it's like you call them and say, hey, we had a home warranty, water heater just took a crap and we've got to get it replaced. Okay, we got you covered. Boom, 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 it's done. It's not this big, long, drawn out, thing. Yeah. And it typically is a lot easier. So I would recommend, especially for end buyers who are living in that home, get a home warranty. It's such a simple thing that really gives you a lot of peace of mind for a long time. So, okay, the next question that I have for you, Amanda, is what is one real estate myth you wish would disappear forever?
Oh man, a real estate myth, probably the Zillow thing, right? So we're always looking at the Zillow comps and we're looking, this is my Zestimate,
That's a good one.
Sometimes it's really accurate and sometimes it is so far off.
Yes.
So you list a house, the Zestimate says it's $250,000, you listed it $215 or $315. That's a huge difference.
It is.
And people are like, well, that's overpriced. Well, time out. This estimate is not right. It hasn't seen the inside of the home. It doesn't know, where what the value are, what the comps are, what the, what additions they've made to that home. All it is a guess, based on, some other sales in the area.
I think it factors in what it sold for years ago or what it's listed for. It's like that thing can swing so hard.
Yeah.
Yeah.
There are so many times that I've seen the same thing, that it's so wildly inaccurate that it's not really something that should be followed.
Yeah.
It kind of eliminates the human element. And I've talked about this like with AI in particular. AI is brilliant and it can do a lot of tasks for you and give you answers to a lot of things, but it gets it wrong too.
Yeah,
Pretty
you gotta be really
regularly. In
careful.
fact, most AI platforms will have a little thing at the bottom that says this is still, not human, and it does make mistakes.
Yeah.
So make sure you reach out to whoever is necessary to find out the proper answer. The same is true for Zillow, in that it's basically using like an AI platform to kind of create an estimate for you, but can be wildly inaccurate.
Yeah.
So I would agree with that for sure. Don't always just assume that the Zestimate is the end-all be-all price that you should be at.
Yeah.
That's good.
Yeah. So, Sean, do you have anything else that you would consider to be a real estate myth?
The thing that bothers me is when buyers they are thinking they're waiting. They're thinking that we're going to go back to, if an example would be pre-COVID pricing, they're thinking like it can't stay here forever.
Interest rates, maybe.
Things
They're gonna dip.
like things like that. You can't bank on that and count on that, because it just, as far as pricing goes, it's just not going to work that way. We're going to have dips, it ebbs and flows. Yeah. We may have another drop in home prices one day, but it's never going to go back to what it was 6 or 7 years ago.
Right. And
so waiting for that is
we have to remember, when interest rates drop, then we get more offers, and then we almost have to start eliminating inspections, and you know what I mean? Like the prices go up.
That's what I tell people.
Even though the interest rate is low, you might have 10 offers on one house, and you're going to have to waive inspection, and maybe hopefully you have cash too, because there could be so we're looking at, it's going to just be way harder to get that. You're going to end up spending more money too. You know what I mean?
Yeah.
So I say buy now. If they drop, refinance.
That's what I tell them, because you want to secure the asset now, because that's where the price is. It's going to be its best in the next 5 years.
Yeah.
Secure the asset now. You can refinance the rate, but you can't do anything about the purchase price. And you're so right. You keep waiting for rates to go down. Well, when those rates go down, the buyers flood the market again. Prices go up. So you've got to, if you're ready, just move, because waiting for that kind of stuff is not going to work.
We say very regularly on this podcast, everything is figure outable. You want to own the asset, even if you're not looking at it from the side of an investor, but you are from just as like an end buyer. This is my home. If this is your home and you've already decided that in your mind, you need to control it. Otherwise, somebody else is going to. You can always refinance down the road if necessary. You can get creative down the road if necessary, but you want to own the asset. You want to control it.
Yep.
And then you can make decisions
based
on that.
There's great reels on Facebook and social media where there's a buyer and an agent at the house, and then the buyer's like, I'm going to wait till next year when prices dip. And then it cuts to the next year and the price is up. And then it cuts to the next year and the price is up. And then they go 5 years out, and it's like... Okay.
Yeah.
Wish I would have bought 5 years ago when we first looked at this house.
It would actually have gained something.
Yeah. And you have the opportunity through that process of living in the home that you loved so much.
Yeah. If it's the right home, that's what sells them.
Right.
I think that's something people talk about a lot, is like what sells the house, or why do people buy homes? And everybody thinks it's always price or this or that. It's just... if it's the right home for that buyer.
Yeah.
It can have a garage, maybe it doesn't have a garage. What does that buyer want? Like what sells a home is the right home.
Yeah, that's very true. One of the conversations that we have regularly in the investment side is the best time to buy was 10 years ago. The next best time to buy is right now.
Yeah.
That's something that we say all the time, is like, gosh, I wish I would have bought all this stuff 10 years ago, but since I didn't, I just got to get started.
Now.
Do it now.
Because I'm paying more for the properties now. I look at Jake's, when he bought his 6 years ago even, I'm like, gosh, if I could have got that for that price. The real estate market does what it does.
Right.
I mean, look at the history.
If you're in a position to buy and this is the time to do it, pull the trigger and then figure it out, as things ebb and flow over the course of 20 years or however long you end up owning the property. So I want to know what you think your superpower is. This is more of a personal question. We've kind of gotten I mean, we've gone down a bunch of rabbit trails, and we've talked a lot about real estate and given our listeners, I think, some really good information that they can kind of think about and process as they move forward in buying a property or selling a property or investing. You know, Sean and I talk a lot about the investment side, and we wanted to have you on because you're more of an end buyer realtor. And so you can give some clarity to some of those nuances that maybe Sean and I don't talk enough about. But more on a personal side, what do you feel like your superpower is? It could be anything. Doesn't have to be real estate.
Yeah.
But
So,
whatever.
I mean, like in a personal sense, I think that I am good with conversation and, you know, I want to say like making friends, making people feel like they know who I am as a person. I really like to open up, make people feel comfortable, use humor, you know, those kinds of things. So maybe that's my superpower. But, you know, when it comes to real estate, I feel really comfortable where a lot of people feel uncomfortable, which is in negotiations. I feel really comfortable when that inspection comes back. I'll be like, don't you worry about this. We'll get this figured out. Because that is a scary time for both a buyer and a seller. And I just, you know, I let people know, hey, like, let's take a deep breath and let's figure this out. We got this, you know? So I feel like in real estate, it's, and maybe I use both of them together,
that's
you
what I
know,
think.
talking, negotiation, make people feel comfortable, using humor, using just,
I've noticed that on your social platforms that like we had not met before today.
Yeah.
But I felt like I kind of already knew who you were because of your posts online and the communication that you have with your, you know, close-knit community and so forth, that it kind of, you could tell that you're a very like outgoing, friendly communicator, and you love to kind of, I don't know, put yourself out there and be detail oriented from the aspect of, you know, creating clarity for your sellers and your buyers and communicating in a friendly manner and stuff.
I
kind
try.
of got that as well from you. So how can folks like connect with you if they want to buy or sell a home, or they want to connect with you for your gym, or
I mean, the best way for me, I think, is social media. So
Okay.
I'm on all the platforms. I'm on Facebook, Instagram, TikTok. I'd say my biggest following is probably on Facebook. You know, I'm in that age group. I'm
Can we talk about that?
47,
Yeah, we talk
you know,
about
like,
we don't even know what we're doing.
yeah.
We're like, wait, Instagram, what's that? How does
that?
it work? We're going back to Facebook.
Yeah. And I think I have my cell phone number plastered on every place possible. So on my website for the gym, my cell phone's on there. You know, on my Facebook page, my cell phone's on there.
What's your gym called?
It's
and a
Willpower
Facebook page?
Fitness.
Willpower Fitness,
Yep,
okay.
Yep. And it's
In downtown Hicksville.
In downtown Hicksville.
Very
yeah.
cool.
And then, okay, your phone number. Do you have an email that people can reach out to you on?
Yeah, I
or-
do. It's real estate with Amanda and with the number 1 at gmail.com is the kind of the one, like the blanket one that I use.
Cool.
Okay.
So, yeah.
Well, I would encourage our listeners to connect with Amanda.
Absolutely.
Give her your business. I've seen firsthand and heard a lot of really great things, and I think she'll go to bat for you and work for you. So thank you so much for coming on
Hey, I
the
appreciate
podcast.
you guys for having me.
It's been fun. We've learned a lot. We've had some good conversation surrounding real estate. Thank you guys for listening to the podcast. We love you. We're excited that you come listen to us. You could listen to anybody. There are hundreds of thousands of podcasts out there, some very, very good ones. And we're honored that you choose to come listen to us. And we hope that we can give you value through the course of the podcast that we put on. Go check us out on all of our social platforms. We are on TikTok, Instagram, Facebook, and YouTube. I got them all.
Nice.
And we're posting on there every single day. So go check out our shorts and weekly podcasts that we put on there. We love you guys. We look forward to coming to you again next week. We'll see you later. Thanks for joining us today on Courageous Stewards, where legacy meets leadership and faith fuels the journey.
If this episode stirred something in you, share it with someone who's ready to step boldly into their calling. Subscribe, leave a review, and stay connected as we continue to explore what it means to lead with conviction, serve with excellence, and build with eternity in mind.
So until next time, keep showing up, keep stewarding well, and remember, courage isn't the absence of fear, it's obedience in motion.